Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the pre-open rates are upon us, 23,535, 136 point of an increase on the Nifty. So at least in the pre-open, we have that 23,500 mark upon us. Remember, the Gift Nifty was just indicating a flattish start. Let's see if this really sustains the kind of move that we are getting. Let's also look at some of the big heavyweight counters to see how the momentum is building up. Let's look at Reliance Industries, HDFC Bank and some of the IT heavyweight counters, since IT has been in flavor for the last 2 or 3 trading sessions. So let's look at Infosys, TCS as well. So some bit of move coming in again on some of the counters from the heavyweight counters. So Infosys is down by about 0.6%. Let's look at the other counters. Reliance Industries, HDFC Bank. TCS is, however, up by about 0.8%. And let's look at RIL. To see how that one is opening. HDFC Bank is absolutely flat at this point in time. But we'll also have to keep an eye out on how the banking counters as a whole are performing. Reliance Industries is down by about 0.5%. Good morning, Shail.
Good morning, ladies and gentlemen. We have 2 guests with us, Payuresh Joshi from William O'Neill and of course Kiran Jani from Jainam Stockbroking. Good morning to you, gentlemen. The end of the week and more importantly, a long weekend ahead. Let's analyze the market from your lens. Mayuresh, good morning. I have specially kept Bhikaji Foods chart ready for you. We'll keep that discussing during the next 30, 35, 40 minutes. But a very warm welcome to you both. 23,400 definitely on the cards now. What do you think is the sentiment behind the market at this moment? A very quiet week so far. In fact, today is the last trading day after a very volatile week, the previous one where we added 720 points. Where do you think is the market headed from now on?
Morning, Shailji. Morning, Sakshi. So 2 aspects here. One, I think the kind of fall that we saw on election day and the sharp recovery that we've seen gives confidence that the Indian economy is expected to remain on track as far as the reform processes are concerned. The second angle that the market was looking at, whether there are any changes in terms of key portfolios, that has probably not happened. So I think 2 of the biggest worries that the market probably have or are probably treading upon, I think that they do not seem to suggest that anything is going to be divergent what we've seen in the past 10 years in terms of system processes. Now the next leg of the market, what the market is probably watching out for is obviously the 100-day agenda. And top of that, I think what probably comes out in the budget. Our own expectations are that there will be no negative surprises in the budget. I think the market is going a little circumspect with some tweaks that might probably happen as far as the budget session is concerned, whether there will be a lot of freebies getting rolled out, whether there will be concessions in terms of the entire fiscal path, so on and so forth. But our own sense is that nothing of that sort is going to happen, no negative surprises for the market. And therefore, I think as the budget session comes closer, there will be these phases of volatility, a range-bound trade that you're probably seeing on the index level itself. But to a certain extent, as the budget session gets over, and if it plays as we are probably anticipating, I think the next leg will come out because liquidity is extremely strong in the markets at this juncture. Global markets are also warming up to lower inflationary data. And therefore, with expectations of good monsoon and the print that we probably got in the Indian context, there is a high probability that even rural spending and discretionary incomes will start going higher, which has been a laggard for the markets. So there are a lot of positives. Corporate earnings still expected to grow in the range of 12-14%, which is one of the bright spots across the globe at this juncture. So I think not seeing too much of a structural downside. After the budget, I think the next leg of rally might continue for the markets.
Right.
Right. Let me just mark 3 very important stocks as far as news is concerned. Ambuja Cement, ladies and gentlemen, we had yesterday pointed out that the Adani Group has readied a 3 billion war chest to buy mid-cap cement companies, and they've done one transaction worth 10,500 crores for Penna Cement in Andhra Pradesh. Ambuja Cement, the top draw at the moment on FNO. 3% higher, 685. L&T Finance, where the parent has brought back 0.5% stake from an open market deal, 1.38% higher, 178.30. And of course, Vodafone Idea. The improvement in the overall corporate structure of Vodafone Idea continues. This time, the company has allotted shares worth 2,500 crore rupees to two of its vendors, which now become shareholders. So given these three stocks in mind, let's get Kiran ji into the conversation. Good morning to you, Kiran. Any two stocks you think will outperform in trade today?
Very good morning, everyone. So overall, looking at the structure, index can be into the consolidation zone. However, we can identify some of the sector where we are seeing some good opportunities. So stock specific, we are very much bullish. So our first stock is RT Industries. If you check out the stock of RT Industry, since last 3 days, we are seeing continuously long build-up is happening on this particular stock. Also, stock was trading below its 100 and 200 days moving average since long time. Last 2 days, we have seen that price is also settled above its 100 days moving average with volume. And considering yesterday and day before yesterday volume, it is a higher volume with higher delivery marking. So overall, very bullish setup on RT Industries. Yesterday's closing price somewhere around 675. We would like to go long for the target of 697 with keeping a stop loss of 664. Another stock which we are liking, it is from the logistics side, VRL Logistics. If you look at the VRL Logistics chart on daily price, it has given a breakout from rectangle pattern. Another thing is that since long time stock was trading below its 50 days moving average. Since last 3 days, stock again sustaining above its 50 days moving average. The momentum indicator also resting at its bullish zone. So multiple factor also available at VRL Logistics daily chart price, where it's suggesting us to go long. So go long on VRL Logistics. Yesterday's closing somewhere around 595. We are looking after for target of 615, 620 in a day or in 2 days, and with keeping a stop loss of 574. So RT Industry and VRL Logistics both are our preferred pick.
Right. Good morning to you, Myresh. I'll begin by understanding from you, how are you looking at these new buzzing themes of, say, affordable housing linked themes, all the stocks within the housing finance names, the realty stocks, the ancillaries, cement space, metal space, for example, right ahead of the budget. Of course, this will also detail some more, fine points when it comes to affordable housing after the cabinet approval. How are you really looking at this space, and is there an opportunity for long-term investors to pick in?
Morning, Sakshi. Oh, absolutely, yes. I think the real estate cycle is still around 2-3 years of the real estate cycle left. What we've probably seen is inventory has gone off, and therefore I think the enthusiasm and momentum as far as pre-sales velocity is very, very evident from new launches which are just getting bubbled up. At the same time, at some point of time, because of the data points that have come out in the US as well, ECB has already initiated one rate cut. There should be some hint of a rate cut cycle initiating by the end of this calendar year or the second half of the financial year, which augurs well for most companies within the BFSI space. For NBFCs in particular, the cost of borrowing obviously starts trending lower, and therefore better rated corporates or housing finance companies who have access to multiple sources of borrowings, and because of their superior credit rating, do that in a very effective and efficient manner, have the flexibility in terms of having a sharp rebound in terms of the compression of NIMs and spreads that we've seen. Again, I think in terms of core advanced growth, expectations of asset quality pressures actually being lower, I think that augurs well. So I think LIC housing is something that we are keeping on our watch list among the large cap NBFCs. But even cement as a space is very, very interesting. I think the acquisition that Ambuja has probably done, the valuations have been quite mouth-watering for Ambuja. But what this really does, Sakshi, is that a lot of these smaller players with capacity between 4, 5 to around 8 million tons, I think those valuations are now going to get cramped up. There is going to be consolidation. Yeah. And therefore, larger names might do well as infra and the growth story continues.
Okay, got that. Let's also get Kiran here to help us understand how should one be really looking at Ambuja Cements and the entire cement space today. Of course, with this news coming in, and like how Mayuresh also expects a lot of consolidation to take place, this space is going to be in the thick of action. Your preferred stocks on the charts?
So looking at overall cement sector, Ultratech has already outperformed. There are a few mid-cap cement stocks also we are looking. So first, let's go with the large cap one. So comparing Ambuja Cement, Grasim, Ultratech and ACC, we like ACC as of now at current market price. Reason being, multiple resistance has been taken place at 2600. Now stock price is sustaining about 2600. The momentum indicator is also getting into the bullish zone. So ACC looks preferred choice at current market price. Yesterday closing somewhere around 2635. We would like to go long at current market price, keeping a strict stop loss below 2600. And looking at price chart, we are expecting price target of 27, 2800 in upcoming time. Another one mid cap cement stock which we are like, it's Saga Cement. It has already moved very rapidly post election result. The stock price was consolidating into the rectangle pattern only. The breakout level was 230. After that, we have seen a rally towards 280. From that particular level, stock again retested its previous breakout level and tested its 200 days moving average, which is placed at 240 level. Yesterday closing was 250, 252. If any dips comes towards 240 or maybe at current market price, anyone likes to go long, they can go long on Saga Cement, keeping a strict stop loss below 230. And looking at current market price, we are expecting short-term target of 300. So ACC and Saga Cement is our preferred choice.
Okay, ladies and gentlemen, let's look at the mid-cap cement targets that could be not only on Ambuja lists, but as consolidating targets for other large players such as Ambuja and Ultratech. Two come to my mind immediately. A long-term one, which is India Cement, based out of Chennai. This is something that shareholders have. This is something that analysts and equity strategists have long pointed out as a takeover target. A very well-known long-term investor is one of the main shareholders in India Cements, and of course Orient Cement. These are the two stocks that will be in focus as far as the probable buyouts within the mid-cap cement space are concerned. More importantly, with the setting up of Amravati, which is the new capital at Andhra Pradesh, a lot of south-based cement plants, listed and unlisted, will now become targets for larger players to consolidate and of course improve their presence. If you look at Ambuja's buyout of Penna Cement, they add overall 2 percentage points to their total market share, and of course 8 percentage points within the area where Penna Cement is situated. It's an unlisted space. Mayuresh, to you. You've been a long-term watcher of stocks like JK Lakshmi Cement, Dalmia Cement, as also JK Cement. Somewhere between the large caps and ultra large caps in the cement sector also lies value. In the mid-cap cement space to large cap cement space, what are the one or two stocks that you prefer?
So for the paucity of time, I'll quickly take names. I think it's JK Cement, which has white and grey cement capacities. Numbers have been doing well. Yes, last quarter's numbers a little bit lesser than expectations, but I think that is where growth will come from. And again, I think JK Lakshmi Cement, one of the few players that can do well in terms of operating leverage. So I think these two stocks can be kept on your radar.
Okay, ladies and gentlemen, we'll now wait for the pre-open markets to morph into a normal market. Remember, we have 3 weekly expiries today, Sakshi, because Monday is a holiday. So the normal Sensex, which expires on Friday, and Monday's weekly expiries of the BankX and the mid-cap select Nifty have been pulled ahead to Friday. So it's going to be a very interesting day. As also, I'll be watching out defense counters. The defense minister took charge yesterday and mentioned that annual exports of defense equipment will now hit 50,000 crore rupees over the next 5 years each year. Okay, we have the numbers, ladies and gentlemen. Flat on the Nifty, 27 points higher. Let's look at trades that matter. Ambuja Cement, 2.8% higher, 683. Idea Cellular, 1.3% higher, 1630. How about National Aluminium? This is again news driven, 2.5% higher. They've been allocated a bauxite mine in Odisha. Okay, the other stock I want to see is L&T Finance. This is something that is very important to watch, 1% higher, 177.40. How about NSE 500? Let's take a very quick detour. Markets on the main indices are expected to be absolutely flat today. Okay, we have pharma stocks. How interesting. Sanofi India, I think this is a bonus adjustment, 2% higher, 6,700. Suven Pharmaceuticals, 690, 3% higher. Garden Reed Shipbuilders, it's a blowout, ladies and gentlemen, 3% higher, 1585. Paytm, no stopping it, 1.8% higher, 433. Schneider Electric in the green. We have Sri Renuka Sugars, 2.2% higher. It's crossed 50 rupees. Let's just take a broader detour into the main markets and then get to our friend Kiran. Okay, let's look at the advanced decline ratio, fairly strong. You have 1490 shares in the green, 421 in the red. Out of the 19 industries we track, 18 are in the green. The top is the Nifty Next 50. Now this is interesting. I want to see the small cap and the mid cap index as well. Small cap 0.5% higher, mid cap 0.33% higher. Kiranji, coming to you, what looks good?
So overall, as we discussed, that probably indices will be in consolidation zone only. Looking at option data, as you also tracking very closely, looking at 23,400 and 23,300 strike price on Nifty next weekly expiry, there is a tug of war. The interesting fact is that market yesterday settled below 23,400, but looking at 23,400 put writers, they were holding 1,16,000 lot, and today market is just gap up about 23,400. If by 10 o'clock or maybe 10:30 market sustained about 23,400, then there are some short covering should happen on 23,400 call writers. They are holding 1,30,000 kind of a open interest on that particular strike. So let's wait and watch. If market sustain on 23,400, then we can expect some spike on Nifty for sure, because that PCR ratio is also trading above 1. So it's a clear cut bullish one. But looking at another strike like 23,500, so there are again very steep resistance we are seeing looking at the call open interest. So trade plan should be like this. If prices sustain about 23,400, one can go long for the target of 23,500 kind of. We are not looking big targets on Nifty as of now. So be a little bit cautious. Keep very strict stop loss of 23,300 or 23,350. If these prices are getting break in intraday charts, then there are chances we can see some profit booking also. Coming to the Bank Nifty PCR ratio is 0.74, which is just below the bullish zone. Here also you can see some interesting fact on open interest rate. 50,000 call writer holding 1,67,000 lot, which is a very steep resistance. And but the 50,000 put writers is also holding 40,000 kind of a open interest. Now the prices is trading below 50,000. So if it keeps sustaining below 50,000, then we can expect some short covering on 50,000 put writers. So it can drag Bank Nifty. So Bank Nifty is not going above 50,000. By that time, we are a bit cautious and we are waiting to have some dip somewhere around 49,500, 49,300, which is a great time to, or great zone to enter into the Bank Nifty. So Nifty, you can go along with a very strict stop loss of 23,350. For Bank Nifty, we are wait and watch until and unless it is not crossing 50,000 level.
Okay, got that. So a lot of other stocks also moving up in tandem. Cement makers, like we've been highlighting, some of those mid and the small cap cement makers are actually doing well. So Sanghi Industries, Sagar Cements, India Cements, they're all up and about in trade. Of course, Ultratech and ACC are slightly up in trade, but it's the broader markets where we will see the cement names continue to rally. Again, we'll keep a broad eye on this entire sector. Now, apart from this sugar space, remember this space also we've discussed quite a lot of times on Business Today. Again, this space seems to be in the thick of action. So, Sri Renuka Sugar is up by 3.5%. You have a Bajaj Hindustan that's again up about 3%. You also have Balrampur Chini, Dhampur, that's all moving up in tandem. So, the entire space could be in action yet again in trade. Let's get Mayuresh into the conversation. Apart from cement space that we've discussed with you, is sugar looking promising to you right ahead of the budget? Should one really make that tactical position right now ahead of the budget in the sugar space at all?
So, Sakshi, I think what has transpired before the elections in terms of curbing in terms of the ethanol program, the expectation largely is that it should come back to normal levels. But what has probably now transpired is that the sugar season will now start in November. So I think the fresh crop will only start coming in post December or Jan. And therefore, I think the existing inventory that they've probably got can only be used in terms of producing sugar from the heavy B route. Obviously, realizations have obviously gone higher for the same, but inventory levels probably seem a little lower in the system per se. So numbers might be a little bit softer, even if it reverts back to mean, because full throttle operations might not still happen as far as the distillery operations are concerned. So to that extent, numbers might just lag by a couple of quarters till we see the new flush that probably comes through by the end of quarter three, and therefore numbers improving by Q3 onwards. However, as a proxy, the stock that you're putting on your screen, Raj, is an absolute proxy in terms of not just the distillery equipment that it probably makes, but a lot of innovations that the company is probably embarked upon. Any success on any of these innovations over the next few months or quarters can be a huge value addition from a top line and a balance sheet perspective. So I think this is one stock that can be kept on your radar as a proxy to the entire space.
Okay, got that. Apart from this, it's the entire rural focus that's coming back in flavor today. So FMCG is up by about 0.3%. Some of the counters are up. So HUL is up and about in trade right now. Then apart from this, auto space stocks which are focused on the rural space. So M&M, Aisha, you have those kind of stocks that are buzzing. Shriram Finance continues to move up. Again, it's a transport financing company. It's the top mover on the Nifty right now as well. So let's get Kiran into the conversation. Kiran, again, some news flows on M&M that is going to be launching some 6 new SUVs up until FY30. And of course, the entire rural theme as well. Auto space specifically, how are you looking at M&M, Eicher and the likes?
So in auto space, definitely it is in trading into the very strong setup. But in auto sector, there are three different in three segments like two-wheeler, four-wheeler, and passenger vehicle. So out of these three sector, or maybe segment, we are liking two-wheeler space. So Hero MotoCorp or Bajaj or Eicher Motor, these are the stock which we are liking. Hero MotoCorp already has given a breakout at 5200 level, and from 5200 to we have seen a sharp rally at 5800. Now at current juncture, we are liking Bajaj Auto. If you look at the Bajaj Auto daily price chart, it has also given a breakout from 90 to 9300, and it is trading at 9800. Any dips towards 9500 would be the strong buy, or even at current market price, you can go long. Keep very strict stop loss below 9500, and we are expecting price target of 10,500, 10,800 in very short time. Also, Eicher Motor is one of the counter which has not performed in by this previous rally. So at current market juncture, if anyone would like to enter into the Eicher Motor, they can also buy Eicher Motor at current market price. Keep very strict stop loss to 4750, and we are expecting price target of 5,000. So preference wise, we are liking Eicher Motor and Bajaj Auto from the Nifty Auto.
Ladies and gentlemen, we are at 9:24. There is a very serious bout of selling that's coming on the Nifty. Now 47 points lower. Remember, the day's high was 23,470. The call writer sitting at 23,500 refuses to budge even on the weekly and as also on the monthly contract. So that is a resistance that is just not going away. And whatever was support around 23,400 for the moment seems to have slipped. We are at 23,351. So it's a range of about 120 points that the Nifty has covered in the first 7 sessions. Remember, buy the dip. Now let us see when that dip gets activated. But for the moment, let's look at the stocks that are causing pain for the Nifty. It's ICICI Bank and Reliance. Contributing a downtick of 11 points each. TCS, L&T and Infosys 555 points. What is pulling the Nifty higher? Surprise, HDFC Bank. There is a CLSA report on this one. 3 points higher as far as the Nifty's contribution is concerned. M&M, Grasim, Titan and Hindustan Unilever. So look at it from this point of view. Amongst the 3 index heavyweights, Reliance, Infosys and HDFC Bank, 2 are down, which is RIL and Infi, and HDFC Bank is absolutely flat. So I don't think so. It's a great day. It is a day only for option writers. We have 3 expiries. Monday is a holiday, therefore options premia will get squeezed. this week was enjoyed by option writers, and probably that's also going to happen today as well. The Nifty IT index 250 points lower, 34,650. Mayuresh, coming to you. Yesterday, the Defence Minister, Mr. Rajnath Singh, held his first day in Modi 3.0. He's been the Defence Minister for the last 10 years in any case, and he mentioned an annual defence export target of 50,000 crore rupees. What do you think are the 3 or 4 stocks which would be benefited the most?
Obviously, I think ship makers are doing phenomenally well, and their execution is being reflected in numbers, Shailji. So Mazgaon, Cochin has done phenomenal stuff as far as not just their order book is concerned, but the execution of that order book as well. Again, the margins of these orders are pretty decent, and therefore that entire operating leverage because of better execution is getting played out. The other one obviously is Hindustan Aeronautics. The stock has done phenomenally well in terms of price action. But to a large extent, I think the kind of orders that they are sitting on, the expectations in terms of fulfillment of those orders, a lot of the orders will also get backed in terms of maintenance contracts as well. So that gives a lot of back-end support mechanism as well to the existing order book. And more orders expected their way. So I think they're already full to the neck in terms of how the order stack up is. But they have been executing well as well. So I think most of these defense companies, where I think the only concern remains is an execution risk, have been doing it very efficiently so far. If they continue doing that, I think earnings will still get reflected, and valuations are not sky high, even for most of companies within this sector as well that I've been discussing. The only thing is some retracement is probably needed, at least from our perspective. But yeah, I think generally the space looks good. The only risk factor, as I pointed out, is the execution risk. And that itself relies on whether the company is able to do the stuff that it is doing right now. If they're able to do that, I think the momentum can very well continue.
Okay. Now, ladies and gentlemen, let's focus on a stock that has gathered not only a lot of corporate attention, but also from anxious shareholders. I'm talking about the constant improvement that we have seen in the corporate profile of Vodafone India. Mayuresh and Kiran, and let's get Sakshi also into this conversation. This is an important point to discuss, but slowly but certainly there seems to be an improvement in how debtors of Vodafone are concerned and how the profile and the shareholding pattern is improving, as also the debt profile. Coming to you, Mayuresh, first, because you track the balance sheets very, very closely, please mention to us 3 positives that you see in Vodafone over the past 6 months, and of course any negative picture that you might think is still an overhang.
So I think a couple of factors that might work in favor of not just Vodafone, for the industry as a whole, Shailji, is obviously the expectations of tariff hikes. Now, as those start taking place in the next few months or next few quarters, don't really know the timeline, it creates a huge positive impact as far as their cash flows are concerned, because with ARPUs that get increased, a lot of stress that remains on the balance sheet in terms of spectrum payouts, in terms of leverage servicing, I think a lot of those issues are addressed because of the sheer improvement in ARPUs itself. The second aspect also in the case of Vodafone has been, even if they have been diluting, the kind of overhang that was there, whether this company will exist or not in the first place, the promoter infusion as well as equity infusion that has taken place. Yes, dilution has taken place that might have some impact on earnings, but it is also taking care in terms of both aspects, in terms of the capex spends that Vodafone would need to do on the 5G infrastructure. It is clearly lagging behind Airtel and Reliance significantly. So it has to protect the circles that it is operating out of with the 5G spend that is needed. And this raise will probably help it in the 5G ecosystem infrastructure and help retain its customers. The only negative side that I probably see is the kind of debt that is there on its books, and how is it going to service that debt? How is that going to come off over the next few quarters? If they're able to successfully navigate and mitigate this sole risk that exists on the balance sheet, numbers will show improvement and the stock will itself show a re-rating. So I think a couple of positives, and debt becomes the biggest overhang onto the stock.
Okay. Got that. So that's the fundamental view. Let's also get you a technical view from Kiran on Vodafone Idea, the way the stock has been in momentum. Kiran, you must be tracking this stock closely. What are the charts really telling you, and what could be the near-term or the long-term targets that you're looking at for those traders who are taking, a massive risk here? Because in the past, like Mayuresh did say, there has been a lot of wealth erosion as well. But now that things seem to be probably moving in the right direction, where is the stock headed?
So overall, if you look at the Vodafone or maybe the industry, there are only three players in India. So many investors or many retail player has taken position in Vodafone just with this logic that probably anyone will bail out the Vodafone or maybe can become an investor. So for this reason, there are a lot of attractions are coming, and also it's become a penny stock. Like generally, retail investor like to invest the stock price which are trading into the two digits. So there are this kind of a reason people are quoting and buying Vodafone now. But looking at the weekly chart or a monthly chart of Vodafone, now some serious pattern is getting breaking out. There are chances that because of this pattern, we can see further attraction in this on this particular counter. As I mentioned that looking at the weekly price chart of Vodafone, we are seeing clear cut cup and handle pattern is getting breakout. Definitely, we have to wait for 1 or 2 weeks. If prices keep sustaining above 16, 17, and 17 level, then there are chances this pattern will the breakout will get confirmed, and we can expect some big targets on Vodafone also. But as of now, looking at daily price chart and the weekly price chart, if stock price is not getting breakdown below 13 level, then anyone can go long on Vodafone at current market price. In terms of rupees, it's just 3 rupees. But if you count on percentage way, it is a very big stop loss. So keep very strict stop loss of 13 rupees. You can go long at current market price or any dip. If 13 rupees is keep holding this particular stock, then we can expect target of 2023 in upcoming time. So purely technical basis, we are recommending this stock.
Okay, ladies and gentlemen, this is a technical recommendation that is coming in. Remember, please speak to your independent financial advisor if you take a step into Vodafone. This is a discussion to help you navigate with what has happened good as far as Vodafone is concerned over the last 6 months, because it has one of the largest public shareholdings on the corporate scene. So keep this in mind. This is just a discussion to help you understand what are the positives that have happened in Vodafone and what are the possibilities. Remember, the government of India has made it clear that there will always be 3 players in telecom to avoid a duopolistic or a monopolistic situation. If you look at the shareholding of Vodafone, the Department of Investment and Public Asset Management, which is the government of India, ladies and gentlemen, has a 32.19% stake. The FPO and the anchor list that was recently in Vodafone for that 20,000 crore FPO has some of the finest names as far as the investment fraternity is concerned, and they've gotten at about 13 rupees, 14 rupees. The counter, of course, is at 16 rupees. So keep this in mind, and in any case, if you have Vodafone in your portfolio, this is a very, very risky bet. The company is still a loss-making company in terms of its equipment and technology. It is way behind Bharti Airtel and Jio Finance, Reliance Jio. But what is critical is that there are signs of life, and probably 0.5%, 0.75% of your portfolio should be in a stock like Vodafone Idea. Again, take a view from an independent financial advisor. Long term, Mayuresh, the health of the telecom sector seems to be improving given the tariff hikes, as also the kind of data consumption that we are seeing because of IPL, because of World Cup 2020, and of course the insatiable appetite on OTT.
Okay, got that. Let's again look at some of the other points wherever stock markets are ticking higher. So the realty remains at the top spot, 1.2% higher in trade, followed by Nifty Next 50, consumer durables, oil and gas, and the broader markets that are ticking higher, along with some moves coming on the FMCG and the financial services space as well. But let's get back to Mayuresh. And before we let you go, Mayuresh, like Shail had asked initially, Bikaji Foods is something that we are interested in asking you. And of course, now things become even more interesting with the talks of even Haldiram's IPO going to be coming in. So it's going to be difficult for us not just to choose the product between the two, but also the stocks as well. How are you going to be looking at this space from henceforth? And when there are going to be more, we are going to be spoiled for choice, how are you going to be deciding?
No, I'm very clear with my choices, Sakshi. So,
okay.
So to that extent, I think Namkeen. I think let's get this very clear. I think Namkeen and the Indian appetite for having snacks in the evening is not going to go off. So I think in whichever town, city you go, you'll obviously have these evening snacks. And Bikaji, Haldiram, there are a lot of unorganized players, local players in the market. Who probably satisfy the appetites of a billion Indians in that extent. So to that extent, I think organized players like Bikaji, Haldiram should gain more strides because their distribution network is increasing. They're increasing their manufacturing capacities. They're adding more products into their suite. They've added Western snacks as an example as well. So there is a variety of products that they've got at their behest. And the best part about this part of the business is how your distribution network is, your price points, and your ability, both in terms of omni-channel presence, which these guys are embarking upon as well. So I think all these triggers work wonderfully well for all these companies.
Sakshi, I think let's look at the Bikaji IPO. It came at 300 rupees. The counter at the moment is, of course, at a record high of about 726. Mayuresh started recommending this counter somewhere like 475, 500 rupee onwards, and the IPO was, of course, somewhere in November of 2022, in the vicinity of I think 300 rupees is when the IPO came in, got listed at 376. So over the last 2 years, about 100% appreciation is what you've seen, and of course snacking and bhujia are two things that are very dear to 1.4 billion Indians, and a lot of snacking companies are doing immensely well. So with that, Mayuresh, thank you so much. Like I said, I keep a book of all long-term recommendations that come in, and whenever our guests come back, we make it a point to revisit them. Any clue from 725 onwards, where is it headed over the next 1 year or so? At the moment, the charts unfortunately look overstretched.
They do. And a large part of the price action has been largely done with as far as Bikaji is done. Now I think it will consolidate. It has to have the triggers in terms of solid earnings growth. So unless that happens, I think a solid re-rating from the current levels is probably not justified. But you know, Shailji, I think markets think otherwise.
Okay, ladies and gentlemen, with that we'll have to thank Mayuresh, and Sakshi and I are looking forward to welcome you to Delhi. We have this culinary trip planned. We'll start with chole bhature and end it with dal makhni and naan, and of course in the evening there'll be bhujia for you. Mayuresh, we look forward to you joining us in Delhi, and we extend the same yes sir.
Where do I take my beard off?
Exactly. I was going to be coming to that Shail, when are you permitting Mayuresh to take his beard off now? I was no, it can't be. Oh God.
Modi 3.0 5 साल ये यही रहेगी.
Oh my God. You're soon going to get a call from.
चल रहा है.
You're going to be getting a call from Mayuresh's residence soon, Shail, right after this show. So be prepared for an answer on that one. That I can tell you. But yes.
Sure.
Okay. In the same vein, I would like to also extend a very warm welcome to Kiranji as well, to join us in Delhi for a culinary episode of Market Today. Like I said, we'll start with the Chole Bhature and edit with Dal.
For a moment, Kiranji thought that you were asking him to also grow the beard. For a moment, he thought that, and therefore you could see that, shock in his eyes initially when you began to talk.
Right.
Well, wonderful to have you, Mayuresh, and we will get you back, and let's see how many grays now you have in your beard next week when we come in as well, or are you going to be looking at coloring it or not? So we are going to be having some more interesting conversation next week. Thank you so much, Mayuresh. We'll continue the conversation and get back to the markets and see where exactly can money be made, and Kiran will help us spot those opportunities as well. Kiran, the broader market's still in a better shape than the benchmark indices for now. Benchmarks have slipped into the red, but it's the broader markets that are still holding up about 0.4% odd or so. Where exactly are you looking for opportunities within the mid and the small caps now?
So as discussed initially also, we are slightly bearish, or maybe indices might be continuing consolidation zone. If anyone would like to take opportunity, now Nifty, as we discussed, Nifty fell back to 23,350. If it keeps sustaining below 23,350, then we can expect some serious profit booking coming on Nifty. Coming to the Bank Nifty also has a steep resistance of 50,000. If it is not crossing 50,000, then we can expect 49,500, 49,300 in today's sessions. Coming to the broader market, as we are liking one stock which is Paytm. It is again a very high risky bet, but looking at last 3 days particular movement, and stock price was into the consolidation zone. We have seen that it has a very steep resistance of 420, 430, and today the stock price is trading above 430. Stock price also trading above its 100 days moving average after, if I can see, December 2023. So it's a long-term breakout, consolidation pattern breakout, bit high risky comparing to the market or a beta, but we are liking chart setup. So one can go long on Paytm at current market price, definitely 430, 420 is the accumulation zone. Keep very strict stop loss below 410, and we are expecting price target of 480, 490 in short term. So it's not only for the intraday, but for some investment or maybe the short term bet, you can go for the Paytm. We already discussed Paytm at 340 level, now it's 430. We have been re-rating this stock.
Okay, ladies and gentlemen, we are at 9:43. Just a point of, how should I say, a point on the market. Look at BKG Foods. The price after our discussion has moved up higher. Again, like I said, the charts are completely overstretched. We started discussion on BKG Foods when it was somewhere like 722, 723. Now it's 735. And a very nice volume picture on the charts as well. Let's get to the Nifty. Sakshi, 9:43. The first half an hour of trade is over. So one leg is seen, which means that 23,500 remains a very strong resistance, because the Nifty reversed from 23,470. It went all the way down to 23,340. Which is the first support level. So possibly now we'll see a swing on the upside. I don't know how long that will last, but one has to be very careful, because options premia will get squeezed further. We have 3 days of holidays. We will again resume trade on Tuesday. Monday is a holiday, and of course we have 3 expiries today. So it's a very difficult day to navigate. In any case, traders are sort of on the sidelines, and that's visible with the kind of volume and movement that you see in the most active counters. Sakshi, the first 6 most active counters are non-Nifty, so that can actually tell you how the interest is. Hindustan Aeronautics 873 crores, BEL 621 crores, both of them defense counters. ICICI General Insurance, there is news on how insurance premia have got up, so it's in the green, 2.5% higher. Ambuja Cement is news led, about 460 crores. Then you come on Mazgaon Dock, about 450 crores worth of transactions. And we'll mark, Sakshi, Titagarh Wagons. fresh record high for you, 5% higher, 15.16, and in the last 10 trading sessions the stock has appreciated by 50%. So that itself speaks volumes about how momentum is building into all PSU sections of the economy, railway and defense in the limelight today, Sakshi.
You know, the other space that's also buzzing in trade today is the entire retail pack. So apart from Trent, we're also looking at some more retail counters like a Canterbury Retail or Spencer's Retail. The entire retail space seems to be in buzzing zone. Even Aditya Birla Fashion and Retail, the entire space seems to be in the thick of action. Anything specific within this basket that you spot, Kiran? Retail space, is that looking positive?
So looking at Trend and ABFRL, the both stocks are on our radar. So as of now, we are liking ABFRL, considering the weekly chart. The stock price is trading above its steep resistance of 300. We have seen that after crossing 300, stock price is getting into the narrow range. But today, looking at volume and the way momentum indicator is behaving, we can expect some blowout movement on EBFRL. So at current market price, anyone can go long. If any dips come towards 320, it is again a accumulation zone, or maybe the opportunity, we can say. Keep very strict stop loss to 300, and looking at Aditya Birla Fashion daily chart price, we are expecting price target of 360, 370 in shorter term time. So in retail counter, ABFRL we are liking. And I just wanted to highlight two stock which we discussed before just result day. I mean the Friday on the exit poll. Bata India and HUL. If Shailji is remember.
Bata India and HUL is something that you had mentioned, and we will again look at these stocks now. 1461 for Bata India and HUL also at 2490 odd levels. Okay, we'll continue to keep an eye out on these as well. Cement basket continues to be in the thick of action. Grasim is now the top mover on the Nifty, 2.2% higher in trade. Of course, Ultratech is also in the thick momentum. Apart from this, within the broader markets is where all the maximum action is. So a Prime Johnson, for example, is up 3.5%. Deccan Cement is up 5%. Nuvoco is up by 3.5%. Sagar Cement is up now 6% higher. NCL Industries is 2% higher. JK Cement, Shree Cement. We've discussed most of these, but some of them, it remains to be in the thick of action. Anything else within the cement basket that, Kiran, you would like to highlight?
So in cement basket, we discussed about the Sagar Cement definitely, and we have seen from 250 level to 267 level. So Sagar Cement, one can keep eye on Sagar Cement definitely at even current market price. Keep very strict stop loss. Now we suggested stop loss of 240. Now we can trail stop loss to 260, 250, and we can add this particular stock at current market price. We can expect price target of 300 in very short time. Another cement stock which we are liking is JK Cement definitely. After ACC, Sagar Cement, JK Cement is also at verge of breakout. Looking at daily price chart, stock price is trading at its consolidation pattern breakout. Secondly, we can also see some falling trend line breakout is also there. So JK Cement can be the stock you can look for some short term investment. Keep strict stop loss of 4200, and we can expect price target of 50 or 45, 4600 in short time. So ACC, Sagar Cement, and JK Cement would be the preferred choice.
Uh, 9:49, ladies and gentlemen, two stocks that I'd like to mark. There is a blowout on National Aluminium, and this is again news led. Remember, the NALCO, as we call it, is a company that's been allotted a fresh mine, a fresh bauxite mine in Odisha, which now has a BJP government, a BJP state government. So again, the double engine seems to be working very well. You have 192 on the board, and the reason why I mentioned 192 on the board is that NALCO has a very strong volume picture as well. Kiranji, before I get the volume data, could you please comment on what NALCO is doing on the charts? 205 crores so far in terms of how volume has shaped up over the first 15 minutes.
So looking at Nalco chart, after the sharp downfall movement, which has taken the support of 100 days moving average, and from that slowly and gradually stock getting back into the height of higher bottom pattern. Now today we have seen some gap up opening above its 20 days moving average, which was a resistance. Stock is quietly sustaining above that particular level. Also, it is also trading near the election day high. So 195 would be the level we are looking for the intraday particularly. If 195 crossed today, then we can expect some blowout moment on Nalco continuously. So as of now, anyone is holding this particular stock, they can keep holding this particular stock with the stop loss of 189. And as whenever the prices is crossing 195, we can go aggressively long on Nalco for the target price of 210.
Okay. Sakshi, so far about 205 crores worth of transactions have happened on National Aluminium in the first 35 minutes of trade. The 5-day average of turnover is 231 crores. So most likely that will be broken. 10-day average is 431 crores. Please keep that in mind. What else is sticking? We'll have a digit change in Oracle Finance very soon, Sakshi. The counter, which was the top gainer yesterday, will move into 5 digits, 9775. This is a counter that moves in fits and starts, but be ready for a 5-digit on Oracle Finance. What else is moving? Well, if National Aluminium and NMDC are moving, you can't keep Hindustan Copper down. The counter is now at 341 rupees. Kiranji, your view on Hindustan Copper?
So overall metal sector is getting back on the track whenever from where they have left. Looking at Tata Steel, JSW Steel, Hindustan Copper, even we discussed about the Nalco also. Particularly Hindustan Copper, if you check out the chart pattern, the stock price made its high of 420, and from that level, stock price retested its previous breakout level of 300, where the 100 days moving average also been tested. Now, from that particular level, stock price again getting back into the height of higher bottom pattern. Since last 7 days, we are seeing stock price consolidating into the very narrow range of 330 to 340. Now, today's stock price is trading about 340. So, we are expecting this breakout to continue. Anyone can go long at current market price, keep very strict stop loss to 325. If stock price is not breaking below 325, then we can expect price target of 370, 369 in short time.
Okay, got that. Let's again look at the stocks that are gaining in trade and some of those which are at a 52-week high level. Strong move that can be seen in this market. Endurance Tech, that's 8% higher. And is at a 52, did touch a 52-week high of 3061, came off after that in trade today. Chemplast Sanmar, we rarely discuss this stock, 609 as the all-time high. It's up by about 8% again in trade. Timken India, which we have many times marked on our channel, 4585, that's the 52-week high level. It's now continuously moving higher, 4594, 7% higher on this one as well. Strong move that could be seen. You have Motherson Sumi or Samvardhan Motherson, that's again moving up strongly in trade. Then you also have Prestige Estates from the real estate basket. Remember, the real estate sector is the top move, moving. In fact, Shell is also telling me that Timken is the same category of the stocks that we have marked many times as the bearing makers. So Schaeffler and SKF, those have been in tandem with Timken, and the entire space is now in the thick of action. So auto ancillary, now Samvardhan Motherson also joining in onto that. Prestige I marked from the real estate space. Dixon Technologies is another one that's been consistently moving up higher. KEI Industries, that's another one. That's at a 5030 mark now, and a strong move, 4.2% higher, again at a 52-week high level. Let's get you to ask, get you to comment, Kiranji, on the entire range of stocks from the bearing space or auto ancillary space, some of them that I mentioned. How are you looking at this space? Does it still offer a buying opportunity, or have investors missed the bus?
No, definitely auto ancillaries is getting very much attraction. We are seeing there are a number of stocks, so not only bearing but other auto ancillaries is also getting breakout from its previous consolidation pattern, or we can also say they have retested its previous breakout level. Now, comparing to the Timken already has given a big movement. So at current market price, the risk reward ratio is not favorable. So we are not suggesting Timken at current market price. But any dips towards 42, 4300, definitely we are liking to go long on Timken with very strict stop loss of 4000. Another one bearing stock which we are liking, it has not moved as of now, but we can say there are some chance that we can gain some good attractions on that particular stock, that is NRB bearings. If you check NRB bearings daily price chart, the stock price has given a breakout of 320 level, went up to 364. This stock also we discussed on your channel. After that particular level, we have seen stock price retested is 200 days moving average at 290. From that level, again, it is trading at 320 level. So at current market price, we like to go long on NRB bearing. Looking at the risk reward ratio, we are particularly liking this stock. Keep very strict stop loss of 300, and we are expecting price target of 400. So NRB bearing can be the stock we can go long.
Okay, got that. The other space that Shail also was mentioning, the railway space, and he mentioned Titagarh. Along with it, RITES is also moving up strongly. Remember, RITES was in the news as well today on the back of some tie-up that it is doing with DMRC or the Metro Corporation as well. So stock is now up about 5.8% higher, 719. A very strong move that can be seen on RITES. Your sense on this stock? Or anything else also that you can add to the railway counters list? Kiran?
Yeah, so on railway counter, we have seen already the big breakouts being pan out in particular stocks. So we are liking three stock particularly in railway. First is the IRCTC definitely. We also recommended this stock at 600 level. Stock price made high of 1100, and from that particular level, it is again getting into the retested is 200 and 100 days moving average. Now stock price again into the height of high bottom pattern. We are liking Indian Railway IRCTC. I mean, at current market price, any dips towards 950, 980, again it's a very good price to enter. Keep very strict stop loss of 900, and we are expecting price target of 1100 or maybe 1200 after this interim budget. Another stock which we are like, it's RITS. If you look at the RITS chart, it is today it is trading into the very sharp up move. But looking at price pattern, the stock price has a very steep resistance of its moving average cluster, where 20 days, 50 days, and 100 days moving average was there. Now stock price is trading above those particular prices. So we are expecting some consolidation pattern blowout happening on REITs at current market price. Anyone can go long at 720, or maybe any dips towards 700 would be the great opportunity. Keep very strict stop loss of 670, and here looking at daily chart where we can expect price target of 800 in very short time. So IRCTC and REITs would be the preferred choice on railway side.
Okay, ladies and gentlemen, time to wrap it up, and I leave you with two thoughts. Remember, we've been now gearing up for the budget, and one more sector has joined the party, which is paper. We track 17 stocks as far as the paper sector is concerned. Remember, this is also a quasi agri theme, because a lot of wood pulp is from the agroforestry part of the economy. So which are the major stocks that I'm looking at? JK Paper, 4.5% higher, 465. West Coast Paper, 4% higher, 668. Quantum Paper, 3% higher, 160. Again, I repeat, all these stocks are in single digit PE. They have been completely ignored by the market, which has run up on different sectors. So again, on this weekend, do this very simple exercise. Slot these companies based on market capitalization and sales. Wherever you find sales exceeding market capitalization and a company being in profit, look at the chart, and then if it is below 200 DMA, that is something that you should be looking into a little more deeply. Apart from the paper industry, Sakshi, one more stock that is doing phenomenally well is Natco Pharma. Remember, about 3 days ago we had discussed this. It is an all-time high, breaking out of a 7-year zone of sideways correction. Now this is around 1200 rupees. this is something to be looked at for the longer term. And two more stocks, PNB Housing Finance, 839. I think there was a research report earlier this week from a very well-known overseas brokerage, and there is no stopping Shriram Finance, 2749, 2.35% higher. Sakshi.
All right. We'll thank you, Kiran, on that note for being with us on this very special edition. And for now, at least, Shail, we have that 400 par, 23,412 right now on the Nifty. So let's hope that stays on, towards the end, and we will be able to say, thank God it's Friday for good ahead of that long weekend. Then 98 point of an uptake on the Nifty Bank, 49,965 as well. So we are ending this morning show on a good note, with hopes that at least when we come back in the closing show, we see these similar levels and even higher going forward from here. We'll leave you viewers with that thought, but do stay tuned. Business Today Television will continue to get you exciting conversations across markets, earnings, as well as an outlook as to how should you be prepared right ahead of the budget in case you have some tactical positions to take. Then how do you make your strategies? And of course, daily calls at 12 noon, which answers all your stock related queries. I'll be back on that one, so do stay tuned. A lot more coming up on your screens. Welcome, you're watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all our viewers. Joining in on the show with me are my colleagues Rahul Oberoi, Nidhi Singhal and also Richa Sharma, joining right in on this show, and they have contributed with various articles and special reports that this newest edition has. Now, to just share a quick glimpse to all our viewers what this edition really looks like. Well, there you have it. On the cover page, you have the market veterans, the stock market veterans. You can see Vijay Kedia, Rekha Jhunjhunwala, Ambarish Palika, and also Ashish Dhawan.